All right, good afternoon, everybody. Event Trader here, and I am, of course, joined by options trader Brandon Mars for the Options Playbook. Brandon, how are you doing today?
I'm excellent. How are you, Gavin?
I can't complain, can't complain. Had a little issue on a NASDAQ long bounce play that I was trying to do off the 50-day earlier, where I don't know if you've ever had this, but my 50-day moving average on my charts, I guess it didn't update once the open came and had it off for me. So ended up being a little bit early on it. So luckily I didn't risk my normal level on it. So I didn't take too much of a beating. But outside of that, just kind of watching and trying to figure out which direction the market wants to go like everybody else. So people will get to hear my thoughts on that a lot, but they don't get to always hear you talking on the audio. So why don't you give us a little bit of your thoughts on the current market conditions that you're seeing?
Yeah, and I feel your pain there. Some of these brokerage accounts and systems sometimes they aren't a perfect science. So I think we've all been in the boat where maybe we've been given an incorrect number. So I feel your pain on that one. Um, yeah, so just kind of watching here. I mean, yeah, I got the charts here in front of me, and I mean, it's been kind of making a nice climb there off the lows of the day, kind of stair stepping up. But to me, it just kind of feels a little weak underneath the surface still, and it kind of feels like they're gonna pull the rug on us at any time. And
I
kind of,
felt that way yesterday because it was on a lot of light volume. So I hear what you're saying on that. So you're pretty cautious on this then.
I am, because yesterday I was watching the exact same thing. I was sitting there watching that climb, and I'm like, well, the indexes are up almost 1%. There's a lot of green out there, but just the volume on a lot of the green candles seemed pretty light. It felt like there was more reversal candles that were out there. Yeah, and I'm talking just on an intraday, like 5-minute basis, where I usually watch the charts. It just kind of seemed like you were seeing a lot of those reversal candles in light volume, and I was just waiting for them to kind of pull the rug on that kind of steep climb, and we didn't get it yesterday. So that kind of made me enter bearish today, just because I thought that the rug pull was kind of lingering out there. And I don't know, you got to be careful, I guess, these days, because it's just every time I'm like, all right, here comes this selling, the next thing you know, all the algorithms jump in, and we're all of a sudden back in the green. But feeling a little weak to me today.
Out of curiosity, is there any particular pattern in the candlesticks? Because I know you follow them pretty closely that you've noticed when you think that there's going to be a rug pull and all of a sudden it got a reversal. Is there anything that you've picked up on in those scenarios that you're watching for this time around?
So I'd usually look for some sort of like a shooting star or hanging man type candle that would be on like some really high volume, almost like kind of double the candle before volume, for perspective. In a case like this, just because we're kind of going that slow and steady climb, not necessarily looking for one in particular right now. It's more just, how many of these are heavier on the selling, and kind of how many of the reversal candles in general add up before they potentially pull that rug.
All right, Brandon, hold on. Give me one quick second. Just trying to get my charts up here. All right, I think we should be good there. How are you proceeding in this afternoon trade then? Is there anything in particular that you're looking for on that front?
Yeah, I mean, you gotta be cautious. I gotta admit, as a trader, this is kind of one of those days that sometimes gets me. When I feel like there's some weakness underneath the surface, but the charts keep climbing. It's like I don't want to bet against the chart, but I also don't want to dive in with calls. So just got a couple of positions remaining open at the moment, and maybe looking for a little bit of a pullback here, and see where those positions land. Those the two that I'm in, MasterCard and Microsoft, that's a good example. As the market's starting to climb, those stocks just haven't gone anywhere really. So Definitely showing some weakness there, and there's some other charts out there that I've seen like that too, which kind of makes me just think the underlying is, maybe a little weaker than meets the eye. So I'll keep an eye on those, and kind of as we head into the close, might try to take a look, what the daily charts are looking like, and maybe add a position or two for an overnight trade. But we'll see where the charts ultimately lead me into the close.
All right. With that in mind, let's take a look at some of the trades that you've got on here, as well as talk a little bit about some of the other names that you've put on the radar. Some trades you've taken, others you've held off, and we'll just kind of talk about that, your philosophy there. But let's talk about Microsoft here, which has been a pretty nice trade for you. You just rolled it just a little while ago here, and now just quick second, getting a little bounce back on the energy space right here. So we'll keep an eye out for that. But Microsoft, as I said, he rolled over the remainder of the 325 puts after a move from around 210 to 350. You've talked a lot about rolling your puts over. You've rolled into the 320 strike at this point. I think your original entry was around the 329 strike, if I'm not mistaken, right?
Actually, the 325 was
325 was your original. Okay.
but
So,
the price was around 329 during the entry.
okay. All right. So why don't you tell us a little bit about what you're seeing on this Microsoft trade? What time frame do you want on the chart to explain this? You want the daily, 60 minute, 10?
Yeah, just daily. I think on everything that we're going through today should work pretty well.
Okay.
I think. Yeah, so I mean, Microsoft, now with basically all the big tech behind us, minus really Nvidia at this point, you kind of have your winners and losers, right? You've got Microsoft and Tesla that have taken a hit, and then you've got Google and Meta. Apple took a hit too. So you've kind of got your winners and your losers. So on a day like today that we're down kind of almost across the board, I would gravitate more towards Microsoft or a Tesla on the put front, and then if we were up, I'd look to the flip side of a Meta or a Google. And Microsoft, it's just been kind of stair stepping down. I mean, that's kind of a pretty well defined trend line of your lower lows and lower highs. So just kind of saw this as the weaker name. And again, I kind of entered today a little bearish, so held this overnight and made a nice move down, and I just wanted to stay with it. Kind of almost feels like at this point you would think it would test that 320 area unless the whole market turns. And this has bounced a little bit off the 323 area, but it hasn't really participated too much in this bounce that we've seen since about lunchtime. So I'm hoping, obviously, because I've got to put on it, that it's just kind of hopefully consolidating for potentially move lower to the 320 area. And then, at this point, after trimming in a roll, you're kind of just at your runner stage. So minimal risk left on a trade like that after you've adjusted accordingly. So, hopefully I get a move down here through the end of the week. And, if not, then I've kind of already taken some of my profits off the table.
And looking good on that trade for sure. Now Mastercard is another put that you bought today. Obviously, you're pretty evident on where you stand right now in terms of bull risk bear with the number of puts that you've been putting on as of late. So, what is it that you're seeing in Mastercard, and what are you kind of looking for from this trade?
Yeah, so if you're looking at the daily again, I mean, the credit card companies have come under some pressure from earnings. I mean, I don't think the reports were all that bad. There was I think some maybe issues, whatever you want to call them here or there, but they weren't terrible, but they've all come under some pressure. And then,
I feel like it's anticipation of the credit cards getting hit. More than anything, people trying to look a couple of months in advance. That's kind of how I'm viewing this recent activity in the credit cards, even though the credit data has certainly been benign, like you're saying.
yeah, no, I would agree with you. People just trying to look ahead because I mean, people keep spending. I think there was a report out from the New York Fed today about record debt and record amounts of credit card debt, which obviously with the interest rates they're charging, that's not necessarily a bad thing for them unless the losses start racking up. So I guess we'll see there. But like we were talking about, kind of things looking maybe a little weak under the surface yesterday. If you look at the volume on MasterCard, its 65-day average volume is 2.81 million shares. Now, yesterday it was a pretty solid green candle. I think it was up a couple percent, but it was only on about 1.5 million in volume. So some light volume there took it right up to that 20-day. And then all of a sudden, you just had the financials that came under some pressure today, and it just felt like yesterday's rally was a little bit weak. So I was just looking for a move down to the 390 area. Actually got a real nice move this morning. Didn't get out quite in time because it moved so quickly. And again, it just hasn't really bounced this afternoon. I mean, a little bit. So hopefully just kind of consolidating before hopefully taking another leg lower for me.
All right. So taking a look at some trades that you didn't take, but you had put on the radar. One that you wanted to highlight the chart, and that's Citigroup, which was put that you were looking at, obviously breaking down underneath its daily Bollinger Bands here. I've got this at its lowest level in quite some time. We got to pop up the monthly to find out the last time we saw this trade down around that level. Well, I guess it got down there in May of this year, following its earnings report at that time. But just a weak chart, and one that you did have on your radar for a put. Now you didn't pull the trigger on it, unfortunately, but there was something in the charts that obviously had you looking for a move like this. So, what exactly was it that you're watching here?
Yeah, so if on the daily chart, you've got the big move down that I've talked about a few times on this call, just a big old red candle, no wick at the bottom on high volume. And then it actually had 14 straight inside days, including one day on the 27th, where it kind of broke above the mother bar and came back down, which to me is usually a head fake. So then finally, just on Friday, it finally had its first close below that big mother bar that they call it. So, it's kind of worked its way back down after 14 straight inside days is quite a bit. So, usually once you finally get the break after that amount of time, it tends to be a good one. I actually really liked it yesterday when I was watching it. And unfortunately, there was just not a ton of put volume on it. So I never ended up throwing it out there. And then, we just got the big gap down today. And, at that point, I think it was already down like 3% on the day. I didn't chase it down. So, like the setup, I mean, it's probably getting a little extended to the downside short term here, but this is probably going to remain a pretty solid put if we, continue to see any selling pressure in the market.
Yeah, because I mean, there outside of those May lows, not a lot really holding it up at this juncture. So definitely going to be a name for us to keep an eye out on. Another one that you were watching. This one you didn't take, and sometimes the ones that you want run without you, and sometimes you're better off not touching some of the trades. And Beyond Meat definitely was one that fell into that pattern there. You were eyeing it up, obviously earnings on tap. So I'm assuming that kind of factored into your decision not to take it. I know last 2 weeks we've been talking how you try to avoid trading these names around earnings just because of the higher cost for the premiums on it and the volatility that's involved. Certainly Beyond Meat with that 30% plus short interest falls into that category. But what was it in Beyond Meat that kind of caught your attention?
Yeah, so I put this in my notes too, just the disclaimer that the earnings were out there, and you're correct. I didn't touch it. I mean, Beyond Meat's one in particular that during earnings the premiums reach very very high levels just because it is a mover. But I thought it was kind of a good learning chart, if you will, when I saw it. So it had that nice move higher, a few weeks ago, which I think was off of news from them getting some new products into like Costco or Walmart, something like that, and ended up creating a pennant pattern. So, basically what I was seeing there is, technically speaking, because it entered into it in an uptrend, it would have, in theory, technically speaking, been more likely to head to the upside. But, in the case of earnings, you've got a very big wild card there. So you got to take that with a grain of salt. But you're basically looking at it, whether it went to the upside or the downside, with that pennant formed, it was probably going to become a pretty good mover in whichever direction that earnings dictated. So, we probably got a little bit of some short covering there after a nice move down today, and it does have that high short interest. But with earnings behind it and a broken technical pattern, this could probably remain a pretty good put here. Again, as long as the selling pressure remains in the market.
Well, you got to figure if anybody that had a short on it, they're just going to sit on that like a bunch of dead weight. Which is a question I would have for you. How do you view option trading around these high short interest names? Does that change your approach at all? Would you be like willing to go maybe a little bit further out of the money than you normally would on another stock, for instance?
Yeah, I usually would, because just generally speaking, some of those high short interest names are going to tend to be the ones that are going to have the higher premiums in general and are going to be your bigger movers. And I mean, Beyond's a perfect example of that. So, for me, maybe going a strike or two further than I would usually would is something I'd absolutely look at on a name like this.
All right. So that is factored in obviously to the premiums too on the pricing for these for the most part.
I would say that Wall Street knows that there's some short interest out there. Probably takes that
Yeah,
into
and, and,
consideration.
anything I could think of, I'm sure they thought of way before, right, Brandon? So, and then the industrials, that's another area. I know Boeing, one of the standout names for today. I've gotten a lot of alerts, and I think Boeing's the only one that I've gotten to the upside. Actually, GBTC2, the Bitcoin ETF. But you had Boeing, Caterpillar, Deere, and GE all on your potential call list for today, noting that they did have some solid performances yesterday. So what are you looking at in the industrials? Or is it something that's jumping out? Is there anything in particular that's jumping out? I know GE is one that we talked about in depth in the last options playbook. So obviously that had to be on your radar. But um, what were you seeing in some of these names?
Yeah, I mean, just kind of all four of them had real solid candles yesterday. I mean, some of them like barely had, any signs of selling, like no wicks at the top, closing near the highs. And, again, when you see a couple names from a sector, I tend to get a little bit more excited because if they all move in unison. And then, yeah, I had saw, we've talked a few times about post earnings setups. I mean, Boeing kind of had that nice move higher, a little bit of a pullback, and then yesterday almost looked like a little bit of an ignition candle to make another move higher to at least the 240 area, and maybe even test the post earnings release high around, it's like 243. I believe that had some news on it today on deliveries and cancellations,
Yes,
so that's probably
delivery
playing
number
a
drop.
factor. Yeah, and then on top of that, yeah, the GE setup that we had talked about, had that nice move higher, had a sort of like a flag like consolidation right down to that 20-day. And as we had talked about on the last call, the 20-day dating back to February has been a pretty good place to buy. And started to make that bounce off of it the last couple of days. So I just saw some strength there in a few of the names. And, for me, I usually do like to throw out both the call and put ideas. Obviously with quite a bit of red out there today, I've kind of gravitated more towards my put ideas than the call ideas. But these are, Boeing's flat. You've got GE's down over 1%. Caterpillar's in the green. Deer's kind of, so if tomorrow, if we return back to some strength, or maybe we get an afternoon surge here, these names probably would gravitate back towards the top of my call list because they continue to show some strength today through the selling.
All right. Anything else on these trades that you want to add, Brandon, that maybe I glossed over on you?
No, I think that about covers it.
All right, so let's get into this week's topic, and that's going to be overnight risk. And we're going to talk about a few things here. Brandon's going to kind of go through his thought process on number one, just holding puts and option or puts and calls overnight. Also, taking a look at some weekend holdings and ways that he thinks about it. But overall, Brandon, when you are keeping something overnight, what do you kind of keep an eye out on there? Is there anything in particular that you maybe adjust your size or anything along those lines?
Yeah, and just to kind of preface why I brought this up, I actually had this on my long list of different topics to talk about, and my good old friends over at Fitch kind of sped this one up last week by destroying what I carried overnight. So I figured some very timely information here. So hence the today's topic. And yeah, it can really make or break your mornings sometimes. The Fitch announcement was an unfortunate one for me where your calls were pretty much destroyed at the open. But on the flip side, if you had taken some puts, I saw at one point, I was looking at Nvidia. You went 10x on puts if you had carried those overnight. So again, news can work for or against you. But to answer your question, yeah, I definitely think it makes sense to keep your risk smaller. I'll tell you, as a new trader, there were times where I carried over multiple different contracts. And you know what, frankly, if I got to move in the right direction, it just made my day. But if it moved against you, it can really, really destroy your P&L. And sometimes if you carry over enough, it destroys your P&L, not only for the day, but maybe the week or even the month, depending on how risky you went.
Let me ask you this, Brandon. Now, when you're talking about overnight risk here, obviously the Fitch, I don't want to call it a black swan event, but nobody's counting on that. Sometimes there are events that is going to happen over the weekend. Maybe a election in Spain or something that could impact markets, whatever it might be. But so when you're talking overnight risk, is that particularly in a name that that there's going to be a risk going into it, such as an earnings or something like that, or are you just talking in general about carrying stuff overnight?
Yeah, I'm kind of talking just generally speaking. If there's some sort of news that I know about, that's a very defined play, right? And again, I
Right.
don't do earnings very often, but maybe if it's like an Apple event or a Nvidia event, that's a very strategic, planned play. This is what I'm thinking, and this is my risk. And in that case, it's basically like a lotto, because you're kind of just flipping the coin, and you've got your thoughts and opinions, and you're going to go in that direction. But yeah, in this particular case, I'm kind of talking about just like generally speaking, like I carried Microsoft puts in today, so I wasn't aware of any news on them. I could have been affected by some sort of geopolitical headline. I don't know. Maybe Google comes out and says that their AI tool is 10 times better than Bing's. Those are random risk. But yeah, on the news events, that's a very targeted play.
So, with that in mind, um, you carried over a couple of puts. Now, you mentioned that they didn't like Microsoft wasn't really moving as the rest of the market bounced, and both of us I think talked about that low volume that kind of made the bounce pretty questionable, and obviously that's shown through today. I assume that's your primary factor on either carrying a put or carrying a call. For instance, the last couple of weeks, obviously you've been doing a lot on the call side because you knew you had the trend at your back. So that's the defining factor for you, would you say, in terms of carrying either a put or a call overnight?
Yeah, I mean, if I see some sort of setup in the individual chart, and then I have, call it a strong gut feeling, and then also, kind of like seeing something like the light volume, or kind of seeing that chart setup that I like, that's 100% a factor in it. And then you don't have to carry risk overnight. Sometimes I sleep better when I don't do it. So if I don't have a strong gut feeling on something or don't like chart setups, then close the positions at the end of the day and revisit in the morning.
How good are you at deciding that you're wrong? For instance, if you have a pretty strong conviction and the chart doesn't really set up the way you wanted to, but you're like, but it could still happen. Will you carry that overnight, or do you find yourself disciplined enough to just take it off the table?
uh, I don't know. It
Because I
depends
know
on
I
which
have a
day you
tough
ask me.
time. I guess that's the right answer, because I know I definitely have a tough time with that, because I'm like, this setup's so good. Everything's going. I got to be right on this, and you just leave it on, and then you come in the next morning and it just kind of breaks down, and you're like, oh. That's what I have a tough time with. So I'm just curious. And do you have like a switch that allows you to do that?
It's not the greatest switch. Sometimes the wiring's a little faulty on my switch.
Yep.
So, for me, if, like, let's just say Microsoft, and this is just a total hypothetical, this is not actually what's shaping up right now, but let's just say that all of a sudden I get towards the end of the day and that has created some sort of like textbook reversal candle, and I had some puts on it. If I'm sitting there looking at like a textbook hammer candle, and again, one candle doesn't mean it's going to reverse. But if I see something that's just like clear as day, it's just like, all right, let's get out. If it's kind of at the coin toss stage, that's usually when I stick around to see what happens.
Yeah, yeah, no, I'd agree with that. So when you're looking at this, does the price, obviously price has to factor in a little bit. If you start seeing things moving a little bit more aggressively in one direction or the other in terms of the option pricing, does that factor into your decision as well, even though maybe the stock price isn't moving as much?
Yeah, that's actually a great point, and I didn't even have that in my notes. Now that I think about it, one thing that I definitely like to look at is heading into the close. If a stock is, let's say Microsoft continues to move down and the puts don't move in price, then that is usually a sign to me. That's the guy I learned from, the old market maker there. He said that that's one of the things that he always watched for overnight risk, is if your stock price is moving, but your option is remaining stagnant. And again, if Microsoft moves one penny, then the option's probably not going to move. But if all of a sudden you've got, Microsoft that moves a point and it's not really getting much movement on the option, that is usually a sign that the market makers might know that things are going to go in the other direction that day. And that's one of the things that I look for to cut and run, and not take it overnight.
Are you paying attention to open interest as well, and the different volume around the different strikes?
Yeah, I usually more look in that particular case more on the overall option chain. So, if all of a sudden I get to the end of the day and it's like, all right, Microsoft has 2 times the normal put volume, I'm a little more inclined to hold on to it. Again, I've talked about the unusual option activity before and taking it with a grain of salt. But if I see that, yeah, I feel a little bit more inclined to roll the dice.
How does now you talk about the trend helping you kind of decide things. What about if you are in a choppy environment? And do you ever look at playing straddles in such a case where you can kind of take advantage of that chop? Does that factor into what you're trying to accomplish on your end? I know you generally like to do straight calls or puts, but do you ever change up the strategy depending on what the environment is?
So a straddle, I mean, for a straddle, you really need the option to really, or the stock, the underlying stock to really get moving in one direction or the other. So if we're just in a choppy environment and I don't have any sort of catalyst, like some sort of news or, interest rate decision or just something to get that moving, I probably wouldn't do that because in the choppy environment, you could open flat next day, hypothetically, and then you end up losing on both sides, which is never fun. So, I've only looked at straddles in the past when there was some sort of catalyst there. In the choppy environment where I'm like, all right, the chart's looking like this, the individual stocks looking like this, you know, I think like tomorrow's probably a good example. We've now had a little bit of selling here. There's obviously some buyers lurking. The candles and the charts are starting to break the trend lines a little bit. So I could see
You
some
got
more
that
selling.
CPI number out there too, which is going to keep people a little honest. You figure, right?
Yeah, exactly. So you've kind of got all those things. So for me, it's kind of like, that's a little bit more of the coin toss. And in the choppiness, you're kind of almost turning that into a lotto, right? With the inflation report. Kind of like you were saying with the strong trend. I mean, I think that's really where it works the best. You probably wouldn't have done terribly over the last, year or so if you had bought Nvidia. And I'm not recommending to do this strategy, but you probably wouldn't have done all that bad if you had bought Nvidia calls at the end of every trading session over the last year. So now where we're starting to get a little bit more of that selling, it can maybe be, I don't want to say guessing game because there's things to look at in the charts, but it's a little bit more questionable that we might wake up to some red or some green.
Yeah. All right. Let me ask you this then. Um, how does the weekend factor in for you here? The one overnight, that's one thing, but weekend, obviously, you got a little bit more room for some news coming out. Uh, everybody kind of hits the reset button once the week's done and shakes off the cobwebs from the prior week. How does that factor into your holding activity? Number one, I know you primarily hold that you primarily play weekly, so I assume that it doesn't factor in too often. And even when you do play on Fridays, you usually play a lotto tickets, right? Um, but how would it factor into your decision? Say, if you were to buy something that's going to expire on the 18th, what's some of the things that you'd be looking for going into a weekend hold?
Yeah, so like you said, I generally speaking don't hold anything over the weekend. I don't know, maybe it's for just my mental health that I just don't want to have to worry about it.
There's nothing wrong
What
with that, right?
Yeah, and there's just so much that can happen over a weekend. Maybe if I see something, maybe we're getting together with China or something on Sunday night, and I'm like, all right, I don't think it's going to go well, or I think, we're going to have a new trade deal. Maybe I'll be inclined where I see some sort of catalyst. The other area that I'd maybe look at is, I don't know, hypothetically speaking, let's just say all of a sudden the inflation reports come in pretty hot this week and we continue to see some more selling. If we got to like Friday afternoon and the charts were looking kind of weak, maybe an afternoon play around, lunchtime going out to the following week, where I thought, maybe the 401ks who aren't buying on a Friday and everybody wakes up, all angry on a Monday morning because they got to go back to work, and they hit the sell button, which, there is the Monday effect. Maybe if I see something like that, I might be inclined, but for the most part, I think, trading and options are stressful enough where if I don't have to worry about it over the weekend, then it's just, I think, better for myself.
That raises a question for me. How does the final hour of trade go? I assume the close is far more important to you than the open in terms of holding. So, or maybe it's not. I'd be curious as to your thought process on, okay, I like, we closed near the lows. That was like last Friday, right? That was a terrible close. Um, that's going to factor into be like, no way am I holding it going into this. Or if, say, we see a bounce and a little bit of a rip at the end of the day, how does that factor in that final hour of trade into your decision?
Yeah, I mean, that will kind of circle them back where, like, on Microsoft, where, like, if all of a sudden at the end it, formed that reversal candle, that might make me want to cut and run. Um, and, kind of like you just said, I mean, both the open and the close are kind of important because, you are carrying the risk overnight trying to play, a gap up or a gap down. If you end up opening up flat, then you essentially carried over that risk and you really get no return for it. So, like yesterday is just a perfect example. It was feeling weak. We've had some signs of selling out there. Charts are starting to close below 20 days a little bit. It just kind of felt like today, was going to be the day that we were going to finally get a little bit of selling. So it seemed worth it to carry the overnight risk. It just needs to be worth it into the close and seeing something that I'm going to get that kind of, I don't know, the morning joy, if you will, at 9:35 in the morning.
Yeah. All right. Let me ask you this because we've all been there. What do you do? Let's, for argument's sake, say you bought those Beyond Meat calls. You are a big vegan and you think that it's the new wave and that you've been buying a ton and you're going to help tilt revenues in favor of Beyond Meat. And they come out and they defecate the mattress like they did. What How do you handle that? Because everybody's been there, just having that trade that went adversely against you. So, how do you handle such moves?
Uh, besides, maybe throwing my laptop against the wall from time to time.
Which
Um,
works?
so, um, in a case like in Beyond, at that point, I'm calling it a loser, and I'm probably holding on to the contract because in a case like that, if it moves against you, you have two choices. You can quickly sell for usually pennies on the dollar, or you can hold on and hope for that recovery. And
Quick question on
unfortunately,
that. Quick question. Is there a level that you, or is it kind of more of a feel thing? Like, do you have a rule where, okay, if I'm 25 cents on the dollar here, I'm holding? Do you do anything like that, or is it just kind of a total feel?
yeah, I mean, in the case like Beyond, I mean, I just pulled it up because I was curious. If you went into the 14 calls going into the close, you would have bought those for about $2. And right at the open, they were down to 30 cents. So, at that point, I mean, after what you pay in commissions to sell your contracts, it's just kind of like, all right, whatever, I guess. So, in that case, I'm holding on to it. And unfortunately, when you hold on to it in hopes of a recovery, that usually turns into a worthless contract on Friday. Just that's you get recoveries now and then, but like the odds of that Beyond Meat 14 call, unless all of a sudden it comes out that vegan burgers cure cancer tomorrow, then it's probably smoked. And for me, I'm just going to hold on to that because it's like not even really worth selling at that point. But no, I don't have a specific level.
All right. But on the flip side, there you bought those Citigroup puts. You come in and you just see that stock down 3%, 4%, whatever it might be in pre-market. Obviously, you're feeling pretty chesty. You're walking around doing a little peacocking. What do you do next?
So, yeah, if a trade works in your favor, and I've talked about this a lot in my morning notes, I tend to be quick to take profits. So, if you got the Citigroup, I think off the top of my head here, from what they were trading at yesterday, I think you like quickly doubled your money on that. So, that's a really nice trade to have in the first 5 minutes of trading. And maybe it continues on and it plummets another 5% and it goes a 5x. But if you could double your money in the first 5 minutes of the day, I think it just gets it off to such a positive note. And on the flip side, let's look at the markets. I mean, they're obviously showing some weakness today, but generally speaking, we've had a very, very strong market. So there's always that chance that Citigroup could quickly bounce. And if you go from a double back into the red, that just kind of starts your day off on a very unfortunate note. So I like to at least, take profits, trim, or that's one of the reasons that I roll. You could lock in that profit. If you still think it's going to go down, then you lock some of that profit in, reset your strike. And, that way you can kind of just breathe a little bit that you have a win under your belt, quickly in the day. And, you mentioned the peacocking. I've been there. I think we all have. One thing I would say is protect those profits. Let's just say I exited Citigroup 100%. I doubled my money in the first 5 minutes. There's a lot of traders. I'm guilty of it too. You start feeling pretty confident and you can sometimes get a little too cocky when you trade the rest of the day and you can give those back. And it just really, it's no fun when all of a sudden it hits 4 o'clock and you're like, why am I red for the day? Like I hit a double at 9:35 in the morning. What happened? So definitely protect those profits and just, if you get one, maybe go grab a cup of coffee real quick and take a 10-minute breather before you look at your next trade.
Let me ask you this: is there any sort of news events that you kind of treat differently, and also technical levels and how they factor into after hours moves? So I'll just throw like a couple of examples at you. Say a company comes out with really poor guidance and stock breaks down versus an analyst comes and downgrades the stock. Um, where it's kind of their opinion piece, maybe they're outside the box, whatever, or maybe they're late to the game, whatever the case may be. And then you got the lighter volume event going on where maybe a 200-day is hit, which causes a little bit more selling to come in. Does that factor in to any of your decisions? Are there any news events that you kind of treat differently from the others on a price action move?
Yeah, I mean, I always try to take the price action with a little bit of a grain of salt until it actually opens up the next day. I mean, yeah, I don't know. Perfect example. Going back to the Fitch news, I had carried over some calls on Marvel, and that was looking pretty good after AMD. I mean, it was up a couple percent. That trade was probably looking pretty good, and then Fitch came out, and it was just gone instantly. So I try to just not dwell on those things too much overnight and stare at the futures and stare at the after hours, because I've just, we've all been there where you see the pre-market activity, you see the after hours activity, and it just doesn't always necessarily translate into the next day. So I try to take all that with a little bit of a grain of salt, to be honest with you.
Yeah, I always remember my worst overnight impact was I had this one GT8T was the company, and they were doing inverters for a solar company, or they were doing some work for Apple, and Apple cut the contract, and that was basically their entire contract. So the company went bankrupt overnight. So I mean, yeah, there's definitely those different catalysts and stuff that come in. So it's just interesting to see how other people think about these things and how they might trade around it.
Yeah, I mean, I guess that kind of reminds me. Actually, I went out to dinner with a friend after the Fitch, and I over a glass of wine might have maybe been complaining just a little bit over the news. Something like that. I looked at it and I was like, you've got Diamond coming out and yelling, being like, this is pointless. But at the same time, we've had such a run in the markets, and I think that the shorts were looking for a reason to jump in. I think people were,
Mhm.
maybe looking for some reasons for some profit taking. And it just kind of felt like one of those where it was like, all right, I think unfortunately these futures are going to follow through into the next day. And I don't see that morning recovery. So, I maybe mentally prepare of like, all right, Brandon, I don't think that this one's recovering unless, Powell comes out and says, all right, we're done raising rates and the economy's great and this, that, and the other. But yeah, if it's something pretty concrete, like companies going bankrupt, I'm kind of just like, all right, chalk that one up in the loss column.
Yeah. All right. Speaking of recoveries here, S&P climbing up back above 4,500. So some productive activity going on here at the moment. So we'll continue to keep an eye out on that. Just keeping an eye out on feedbacks here. So Brandon, what are your parting thoughts here on this topic?
Let me just check my list here real quick. I think we got everything. I guess one quick example of a time that I would maybe do something like this that I didn't touch upon. Maybe if there's something like a Fed meeting. So, let's say the Fed announcement is Wednesday. Well, they're always on Wednesday. So if you enter into Wednesday morning, generally speaking, you're going to find some of that, choppy action, but sometimes you get some of those gap up and gap downs, and then you go flat. Sometimes I might look to potentially be more inclined to enter into something on that Tuesday afternoon, just so I can kind of play a potential gap in the morning before things get a little boring. And then I kind of like a scenario like that too, because even if I'm wrong, then I potentially have the Fed announcement as a major catalyst to potentially save me, on that lotto. And, again, the Fed could make the market go even more against me and make it even more of a loser. But I kind of like when you have that, some sort of catalyst to potentially save you. And, you can't ever count on catalysts, and you can't ever count on options contracts ever being saved. But, if you do have something out there, it's better than nothing, I guess, if you're wrong.
Yeah, yeah. So just kind of a the risk upon the risk is basically how you're looking at it, right? You know, there's always going to be some sort of risk there, but like you were talking about earlier, the known risk versus the unknown risk. Just figuring that that known risk gives you kind of a little extra padding, I guess, is what you're saying.
Exactly. Yep.
All right, perfect. All right, Brandon. Well, again, another good chat with you here. Did we miss anything before I let you go?
We got every single bullet on my list, so we got
All
it
right.
done.
I did skip over one part with the earnings setups, but we'll circle back to some of those next week. I think with those industrials that you're laying out there, I'm sure you're going to be taking a look at them as the market bounces back here a little bit in the afternoon. So we will let you go take a look at them. But Brandon, as always, a pleasure talking with you and great to hear your thoughts. And thanks so much for joining us and giving us a little insight into the options world out there.
Thanks, Gavin. I appreciate the time as always.
No problem. We'll talk to you. We'll talk to you next week. So, all right, that's going to do it for this options playbook. I'm going to pause Trader Audio once again. So we could just wrap up the taping of this. I'll be posting it shortly here for anybody that might have missed anything. Tried to do my best with keeping bullets along the conversation and what minutes things are transpiring at, so it makes it a little bit easier for you to track down if there's one specific item that Brandon had talked about that you're interested in hearing a little bit more on. So we will be shutting down right now. We'll talk to you soon. If anybody's got any questions on anything, definitely feel free to write in and we'd be happy to get around to them.